Hi, everyone, and welcome to the Buffett and Beyond Research Saturday Stock Market Recap, February 21st, 2026. And remember, folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And the market, well, oh boy, another week that was crazy. And on Friday, the Supreme Court decided, or we heard about them deciding, against about half of the tariffs imposed by this administration, which means maybe half the money of the trillions and trillions of dollars, well, billions and billions of dollars that they've received might have to be given back. And then the market tanked at first, but then finished the day nicely to the upside. If you watched the market yesterday, you're still dizzy. Unbelievable moves both ways. Now, there seem to be other laws that can be used to get around the International Emergency Economic Powers Act. So does the government really have to give the money back, or half of the money back that it received from tariffs? And that's what we're going into Monday and Tuesday and all of next week about figuring out what's going on. And I'm sure the newscasters will come out with all sorts of things over the weekend, but we'll know next week. Right now, we're doing okay. Now, our weekly stock analysis video, we're going over Taiwan Semiconductor, and it's up about 3 times that of the S&P over the past 5 years. And now that they're going to build some of their production in the U.S., which cuts down the risk of the ongoing China-Taiwan danger of their disagreement over who owns Taiwan. Well, there's no question about who owns Taiwan. The thing is that will China invade Taiwan? They are different political systems, to say the least. All right, our ETF video. What's going on with the tech ETFs? With the XLK, which is the tech ETF that we follow, down 2.5% year to date, while the semiconductor stocks are, or the semiconductor ETF is up over 11%, and our top stocks in that are up close to 16, 17, 18%. But back to the tech ETF, the top stocks over 7 years are up a whopping 919%. So even though the XLK is down 2.5% year to date, our top stocks are down about 0.7%. So our top stocks are doing better than the ETF itself, but we have to look at the longer picture. And tech is everything, folks. And our top stock picks over 7 years, as I mentioned, are up a whopping 919%. That's 7 years. And we'll take a look at that chart, which is one of my favorite charts, of course. Between that and the semiconductor chart, also up 900 and something, almost 1,000% over the past 7 years. We've got some good stocks going there, folks. All right, let's look at the S&P 500. And this indicator up here, this buy indicator is still, or this buy signal in here is still in effect. And if you look really close, that was a tough decision in there for the market to go up, because we said, I think it was just last week, that this had to go up in order for us to get that signal. And it took 2 days in order to do that. But it finally did. And now we're riding nicely, but we're sitting at the 20-day moving average in here. Yeah, so the blue lines are the volatility lines, and we came down and tested. Look how many times we tested this area in here. And now we're going up, but we're still having trouble with that 20-day moving average, as we did a couple of days ago. So we'll see what happens this coming week. Good thing is we had pretty nice volume on Friday, which is a good sign. So in other words, this green line, we had better volume on Friday with an update than the downward volume on Thursday, which is this red line in here. Good sign. And we're down on the zero line on the overbought, oversold area, and it looks like this black line wants to turn up, but of course it tried to turn up several times in here, didn't it? So we'll see what happens this coming week. Let us look at this indicator. This is the same chart as the one I just showed you, but now we're looking at this indicator, which but has turned up. So this is a good sign in here. Again, we're stuck at this 20-day moving average right in here. Now let us look at the QQQs, and this is 3 months. And yeah, we had that buy signal in here, the same as on the S&P 500. We're trying to attack this 20-day moving average, and we don't like the 20-day moving average pointing down. But we, again, with the S&P, as with the S&P, we had good volume on Friday, which is nice to see. And we are very oversold in this NASDAQ 100 and the NASDAQ itself. The chart looks almost exactly the same. We're very oversold, and it looks like it's starting to turn up. This could be a nice buying point in here. And I want to show you that this 600 level on the S&P, on the QQQs, has been tested and tested and tested, and goes all the way back over here to where it came down to 599.5. So it's that 600 level that's very, very important. And yeah, did we go down below it a couple of times? Yes, we did. And that was very, very scary in there, especially this one right here, because it went down on pretty heavy volume. But then it shot right back up again. So we're looking at that 600 level. Right now we closed at 608.8. So that was nice, but we still have to get past this 20-day moving average, just as we do on the S&P 500. And this coming week, of course, you have all the tariff hullabaloo going on about what money can be kept, what money can't be kept. How long does it take to go around some of the laws that are already existing and what the Supreme Court said? So it's going to be a crazy, crazy week coming up, folks. But this down here has us very, very hopeful. We just need a couple of up days, and might get a buy signal in here, and this is an intermediate term indicator. And then yesterday we sent out a special alert because the February SPY puts, and remember SPYs are the 1/10 of the S&P 500. So this was canceled out, and we went ahead and bought the May 15th. For those of you who want protection, and some of you never buy protection, some of you buy a little protection, but that's strictly up to you. But this would be a $200,000 portfolio, and you can see it costs money in here in order to do that. So some of you say, I don't want to spend that money. I'd rather see it over time. These puts are so seldom used that I'd rather see, rather than spending the money on puts, I would rather wait until there's an economic change, like the raising of interest rates by the Federal Reserve or something of that sort, tightening of economic policy. But we see good things ahead, so many of you are not using these, which is fine. It's up to all of you. And all our research shows that we didn't use puts in our research because we wanted to see, especially with the 30 stock portfolio, a 23-year track record that shows us way ahead of the S&P 500 without using any put protection. It buy and hold, and we change the stocks maybe once a year, and we don't change all of them, just the ones that are being replaced. Some don't perform, some start losing their economic growth, or their earnings growth slows down, and they're replaced by another stock. But it's pretty much a buy and hold portfolio with a few changes every now and then, and those changes work very well because we're testing that right now. We'll be showing that. Anyway, the SPY is 689. It's up 4 or 5 points over last week. And let's go to the QQQs, up only about 3 points from last week. And same thing, the February 20 puts expired, and we bought the May 15 puts yesterday. If you were reading the letter, if you don't, but you want the puts, then you do it on Monday. Not a big deal. So there you have it, folks. Again, this is about a $200,000 portfolio. Here's the cost of those. And some of you say, I just don't want, just let it run, just let it ride. So, folks, we had a tumultuous week. Now, I said that about 4 weeks in a row, maybe 5 weeks in a row, and it is absolutely crazy, the market. But you have to just think about the individual companies you have and let them keep making money, because the market is a day-to-day movement, And it depends on the news. It depends on what the administration says. It depends on what the announcers say and the newscasters. But overall, look at your stocks and are they making money? And I know that every stock we have is making money each and every day. So how the market markets or tells us about the individual stocks, it's just the buys and the sells going on. But as long as those companies are making money, you're not going to get hurt unless we have an economic downturn. And then we try and protect against that, but we still also have defensive stocks in our portfolios. That's why we have the Costco's. That's why we have the O'Reillys. That's why we have some of the food stocks. So most of you just let it ride. You take your lumps when the economy's bad, but most of the time the economy's good. It's growing just about every year, and our portfolios have done very, very well. So go out this weekend, forget about what's going on in the market, enjoy yourself, be with your family. Most of all, stay safe, and we'll see you right back here in a couple of days.